over to you.
Perfect. Thank you so much. Good morning and I guess good afternoon as well to everyone. And thank you for joining us. My name is David Karapetian. I'm a co-founder and co-managing director at Valoris Stewardship Catalyst. On behalf of Valoris and our partners at the StePs, the Association of Stewardship Professionals, welcome to our joint webinar. Valoris is a boutique advisory firm specializing in corporate governance, investor stewardship, and sustainability. We provide services to institutional investors, financial institutions, and their portfolio companies, helping translate responsible investment commitments into operational practice. We work with fund managers at different stages of their responsible investment journey, building out policies and frameworks, strengthening internal alignment, making sure their ESG approach is genuinely integrated into how they invest, not just how they report. We also work with development finance institutions and the fund managers they back in emerging markets, where strong governance and sustainability practices are often what separates a good investment thesis from a good outcome, and where we see significant opportunity to grow. The 2025 PRI reporting cycle opens up shortly in early May. For most firms on this call, the next few weeks are already accounted for. Data gathering, policy reviews, internal sign-offs. But we wanted to use this moment to ask a different question. Not are we compliant, but what are we actually learning? Because the firms that get the most out of PRI membership aren't the ones that check the box most efficiently. They're the ones that treat each reporting cycle as a structured occasion to look honestly at the gap between what their policies say and what their practices actually do. That gap, what do you do with it, is where the real value lies. This session today is designed to be practical and candid. We'll explore how to use a reporting process to surface misalignments between policy and practice in both directions. Because sometimes your practices are ahead of your written policies, and that's value waiting to be captured. We'll talk about calibrating your responsible investment framework to investment strategies you actually run, building internal capacity, and critically what comes after reporting cycle. PRI membership isn't the finish line. Each completed report should generate a concrete and specific agenda for work that comes next. Before we get into the substance, I'd like to hand it over to Alexander, who will introduce the StePs and what they bring to this collaboration. Alexander, over to you. Microphone, Alexander. Alexander, you're on mute still. Alexander, we can't hear you.
All right.
You hear me now?
Yes.
We can hear you now. Please go ahead.
Sorry for that. So I've brought a little presentation with me, and not only that, I've been at the hairdresser and put on a shirt, especially for you, Mike. And this webinar.
This is being recorded, Alexander, so we're going to put it on the website. Don't take it any further than that, okay?
Okay, so I'm quickly introducing StePs and would like also to show you how StePs is related to PRI reporting. So if you, that's our usual logo. It's not our logo. It's a picture we frequently use on our website, in our presentations. We thought it's very nice with staircases and the bookshelves, etc. So if you move on to the next slide, it's only 5 or 6, so and they should provide me with some guidance. We set up StePs 3-4 years ago as a non-profit organization in Germany as well as in the US. StePs, that stands for Stewardship Professionals. We're fairly proud of this name. I think it's a very nice acronym, and it's sticky. We set it up, the association, with the aim in mind to provide the stewardship professionals a home. We wanted to help to advance this profession and to develop standards. In doing so, we developed a blended learning platform. So you do not only have online sessions, but we also have in-person classes, but also webinars, etc. I think we've basically covered all sorts of learning and education now. So we provided in-house trainings for asset managers. We provided online courses to asset managers. We provide webinars for associations and etc. And also the online learning. It's for individuals and corporates. So individuals can sign up for the Certified Stewardship Professional course, as well as corporates. And we provide the content in person as well as virtual. We're fairly proud of the international coverage we have. So from Canada to New Zealand, that's not true, from the US to Australia only so far, from Brazil to Japan, we cover most of the important markets, and the content in this is also reflected in with our instructors. So they have various backgrounds coming from various markets, and not only that, they also have a practical. Some are coming from the practical side, but others are coming also from the academia. We do not see as competitors to other existing association and certification programs, etc. So, for instance, here over in Europe, we have the Certified ESG Analyst, and we see ourselves complementary to this program or the GSS course ICGN offered. We see ourselves complementary because we can add to the value of those programs. Next slide, Mike. Yeah, this is just a quick view of the learning platform, how it's looking like. We divided the program into 5 pillars. I'm coming to that later on one of the next slides. So we have video lectures, etc. It's very easy to digest. It's state of the art. You can watch some clips and then do some games, do some reading, looks at some statistics, etc. So it's fairly easy to digest. And at the bottom left, you see some of our instructors, not all of them. We have not twice as much, but definitely some more. But then the pictures will get too small. All that will, maybe next slide, Mike. Yeah, the syllabus, again, we divided it into 5 pillars. That's something we learned during the course of our careers. Every time we hired somebody, we were happy if he or she knew what a share was or a general meeting. And from then on, we had to train and educate the new staff member. And that was very cumbersome. It took time. It was expensive. And then after 2 years, they gave you notice and moved on to an asset manager or to another association. It was sometimes frustrating. And we learned from that and decided to develop this program so that it should help associations as well as asset managers, proxy advisors, proxy solicitors, law firms, auditors, etc., academics, to develop the stewardship professional. So the first pillar is the fundamentals. It's about corporate governance. It's about stewardship. It's about the structure of a board. Why is remuneration important, etc. Then we look into the toolbox of stewardship. How do you vote a general meeting? How do you engage with the company? How do you escalate? How do you litigate? How do you look for an exit? The third pillar is more or less the content of the ESG, the policies behind that, entangling ESG. And the fourth one is about the outcome, meaning the reporting, how do you assess the stewardship, etc. So while the first four pillars are covering, are mostly unique among most of the markets, the fifth one, we wanted to take a deeper dive into market-specific aspects. So for instance, in Japan, the independence criteria are far more loose than in other markets. In Italy, we are looking at a slate list election when it's coming to board elections. In Germany, we have various legal forms for companies. We have a two-tier board system and also employee representatives on the board. And all that we wanted to cover in this fifth pillar. And again, on the bottom right, some more instructors from ours. So next slide, please, Mike. And this is everything broken down, all the topics into one page that was important to us. And if you have your glasses on, or if you have very good eyes, and you look into pillar number 4, reporting assessment, 4.2, you will see filing PRI reports. So that's also something we are covering among other reports, other aspects. The complete course is, we say it's 66 hours. You can definitely take course shortcuts, but you can do all the reading and everything, and then you can easily get beyond 100 hours. So it's something, let's say, between 30 and 80 hours, depending on how you structure your learning. If you've done your work, you can take the exam and become a certified stewardship professional. Yes, that's it from my end. I think it's been a little bit more than 5 minutes. Sorry, Mike.
Perfect, Alexander. Thank you so much. Let's get things going, I guess. Leading today's discussion on the Valoris side is Mike Lubrano, Valoris' co-founder and managing director. Mike brings perspective that is genuinely unique. He's been on the investor side, on the advisory side, on the standard setting side of the work, multiple hats. And before founding Valoris, he was co-founder and managing director of corporate governance and sustainability at Kartika Management, an emerging market fund manager where he built and ran the firm's ESG program from the ground up and had the pleasure or any other term
of just call it an experience.
Multiple experience preparing and submitting PRI reports. So he has first-hand experience in that sense. And prior to Kartika, he spent a decade at IFC, establishing IFC's corporate governance practice. He knows what it actually takes to embed responsible investment into an investment firm. So not just the theory, but also the practice. And Mike will be joined by Bradley Zucker from Ancora Alternatives and Karen Reichenberg from Sands Capital Management. Each of them bring in different vantage point to the PRI journey, from first cycle navigation to long-established practice. And before I pass the floor to Mike, I wanted to remind all the participants that if you want to ask any question, please use the chat function to questions, at least until the point where Mike has the power of unlocking and enabling you to ask questions in person. With that, Mike, over to you.
Thank you very much, David, and welcome everybody on this call. You're right, David. I have some experience with PRI reporting myself. At Kartika, we participated in the first year, which I believe is 2013, the first year of PRI reporting. But our speakers have much more recent experience, and they'll be sharing that today. Our 4 speakers today are Saba Al-Kabalat and Monica Pedraza, both of senior analysts at Valoris. And our guest speakers are, as you mentioned, Brad and Karen. I'll introduce Brad and Karen when their time comes, but first we'll begin with Saba, who will give us an introduction to the changes in this year's PRI reporting. So over to you, Saba.
Thank you, Mike. And this is Saba, a senior analyst at Valoris Stewardship Catalyst. And as you mentioned, I would walk the attendees through the changes that have been introduced by PRI to the 2026 reporting framework compared to that of 2025. I will not go through each and every single change introduced by PRI, but I promise I'll cover the most significant changes that matter most for how signatories approach the next few weeks of preparation, because as David mentioned, the reporting window opens in early May, so around 2 weeks from today. The changes can actually be grouped into 3 categories. The first type is changes to the questionnaire, then changes to the scoring and assessment, and changes to the outputs you receive upon submission and assessment. The first type of change may be the most significant or biggest structural update to the reporting framework by PRI in several years. So in 2025, signatories were required to report and respond to a number of indicators and questions that were spread and distributed across many modules. Ones were on organizational overview, asset class specific modules like fixed income, private equity, listed equity, policy governance and strategy, and other modules. PRI decided to get rid of the module structure and introduce a new structure this year. It's called responsible investment activity. So they introduced the questionnaires in a new format. You have 9 responsible investment activities. Each responsible investment activity has a number of indicators to which the signatories are expected to respond to. The new signatories are, so the new reporting framework by the signatories is expected to be filled out in accordance with the new indicators introduced by PRI and with some indicators from the years before. And the new responsible investment activities cover also policy and governance. There are no asset class specific modules. There are modules or responsible investment activities on investment analysis, investment decision making, engagement with external managers, stewardship with policymakers and other stakeholders, stewardship with the assets and investees, as well as other responsible investment activities. So as you can tell just from the names, there is no asset class differentiation with the titles. There are some indicators where signatories are expected to respond for each applicable asset, but it's not in a standalone module, and that's the simplification, because in the past, the logical flows between the modules were not the easiest or the simplest to follow, especially for signatories with multi-assets. And the other minor simplification when it comes to the questionnaires is the nature of indicators. This year, PRI would like the signatories to focus only on the mandatory and core reporting. So they have a cap. They introduced a cap or a maximum number of indicators, which is 40, where the signatories are expected to focus and provide concrete responses to. The second type of change is regarding the assessment and scoring by PRI. Largely, it has remained the same, but they got rid of the multipliers. So in the past, the indicators were scored out of 100 points, but some multipliers applied to certain indicators to provide different weights depending on their contribution to the final score of that module. This year, PRI got rid of the multipliers, so when they score the indicators, they will still score them out of 100 points, but no multipliers apply. So some indicators will be assessed, others will not be assessed, and that's the way they contribute to the end score. And the second simplification, which is related to the module score. So in the past, there were scores per modules. Now there will be scores per group of responsible investment activities. Last year, there was no overall organizational score. This year, there will be also no overall organizational score or star rating. It would be only for the activities grouped by assessment groups. And the third type of change may be my personal favorite. It's regarding the outputs. you will get as a signatory upon submission and assessment. So PRI would allow signatories to get an instant report which they can share right away after submission, which can be used for internal discussions, also with discussions with their own consultants on how to improve for the years to come, as well as the transparency and assessment reports. But this time, PRI would add more contextual guidance in the assessment reports. And I think this is something that speaks to the signatories because they had to deal with understanding why they got certain scores, not higher scores based on their responses. So PRI promised to provide more contextual guidance in the assessment reports. And even the way PRI frames this change is telling because they describe the years between 2023 and 2025 as reporting and assessment, while the years from 2026 onwards as reporting and insights, because they want the signatories to see this as not a compliance exercise where they get a score at the end, but also an insightful exercise, a learning experience where they can develop their own practices over time and learn from peers, because there's a benchmarking tool on the platform that signatories can map and also compare their performance at the activity level, the responsible investment activity level, or at the indicator level. And that's something that they can benefit largely from in improving their own practices and reporting for the future. The changes do not end here because PRI already mentioned that in 2027, there will be more changes introduced, but this year is the foundational year. The most important changes regarding the core reporting are set this year, and any new changes in 2027 and afterwards would build on this foundation and introduce a more pro layer, as they call it, where the signatories can go further in their reporting. And that's it from my end. Over to you, Mike. Happy to answer any questions at the end if nothing was clear.
Thank you very much, Saba, for that insightful discussion of the changes this year. I hope one of the messages that you've gotten across to particularly the folks who are new to PRI reporting is that this has been an evolution ever since 2013, yes, when the reporting has been introduced. And I would say, as much as I got to admit that back in 2013, 2014, I found the process very difficult and not necessarily tailored to the different types of investors that were participating. I felt at the beginning it was very much focused on large portfolio of listed securities types investors. And since then, the reporting framework and the reporting forms have become much more, let's say, accessible to all different types of investors. But also the purpose, as you underline, has changed from the beginning, highlighting the basic practices, then to a system that allowed for a certain amount of scoring, even to now, which I think is consistent with the name of this webinar. It's now viewing, PRI now views this process itself as a strategic tool for the investors and a way for it to for investors to learn from it and use it to improve their practices. So thank you very much for highlighting this. We are graced in this graced by two outside participants in this webinar, Brad and Karin, one from an asset manager that has recently become a PRI reporting manager, and another that has been a long time reporting manager. We'll start with the newbie to PRI reporting, Brad Zucker. Brad is the Chief Administrative Officer of Ancora Alternatives. And as it says on the tin, Ancora Alts is an alternative asset manager providing innovative investment solutions, including activism, multi-strategy, and commodities funds. It's based in Cleveland, Ohio, and its recent activist efforts include the Norfolk Southern, CSX, U.S. Steel, and Warner Brothers cases in the last couple of years. Brad, if you want to say some more about Alts, please do. And I'll turn it over to you to discuss your experience as a first-time PRI reporter in the last cycle. And now I guess the second time will be this year.
Hello, everybody. Thanks for having me. Just by way of background, Mike's description is accurate, but we're part of a larger organization. So we have a company called Ancora Holdings, and I bring this up because it's relevant to our process. Ancora Holdings was founded in 2003. We have about $11 billion of assets under management. We have over 100 professionals, and we're a pretty diverse financial service firm. We not only offer institutional wealth management, high net worth wealth management, financial planning. We get into all areas of insurance, health insurance, life insurance, property and casual. We also have a 401k division with over $1 billion of assets under management. We do have mutual funds, hedge funds, and our hedge funds are specific within a dedicated RIA and a dedicated division with hierarchy and our own org chart, which really became important as we want to distinguish reporting and the PRI framework only in the Ancora Alts division. We initially got engaged with the Valoris team in 2022. By way of background, we formally engaged them to start on this reporting process. October of 23, we first submitted an application, January of 24, and then ultimately reported for the first time in the May of 25 last year framework. I mention that because for those that are interested, whether you just want to work with Valoris to tighten up your policies, procedures, look at what you do, or whether you want to, proceed to be a full-on member, timing is of the essence, and you got to plan on what you want to do and meet the deadlines, because depending on when you apply, depends on when you formally need to report. So we're a team of 12 people on the alt side. We're very lean, 7 of which are investment professionals, ultimately 3 people on the operations side. Hard for us to do this alone. This was a big undertaking for us and something that we planned out. If you want to bring up this slide real quick, I don't know who's controlling it, but we got a couple of talking points beyond this.
Sorry, Brad, it's going to take me a moment. I didn't realize that you wanted me to get the slide. I'll find it.
Okay. Essentially, the first phase of what we did was we looked at our current policies, practices, firm values, and we determined where the gaps were. So Valoris came in, they worked with us. They looked through everything from our policies and procedures to our marketing materials, to our offering docs, to our, specific, if you want to say ESG related, practices. I would say that there's a lot that we did formally. I would say there's a lot of documentation that we didn't do, which is key, to this practice, and something that, we've adopted over the last couple of years. The initial output was a stewardship and sustainability policies and practices, and some of which actually went into our written supervisory procedure. But initial output was a formal policy for Ancora Alts only. Part of our evaluation was, are we doing this for the full firm? Are we doing this with Ancora Alts? And we initially decided to do this with Ancora Alts because of some of the practices we are already doing, and how important it is to our role as an activist. Second thing we kind of developed, or Valoris developed for us, and we kind of modified from some of the best practices they have, was a toolkit. And the toolkit is, you can think of it as an Excel spreadsheet with different tabs for different thought processes. There's a tab, shareholder rights, board compensation, independence as an example. And within each one of those tabs, there's areas of focus with specific and detailed questions amongst all those items. So if you look at, there you go. So I initially talked of point 1 on the left. I'm now talking about point 2. in the middle. By way of an example, when you think about boards, how many directors are there? What's their duration? How frequency does the board meet? Independence, those type of questions. So it's really gathering all of the ESG related items that we want to focus in on. But you focus in on various stages. So you kind of middle of the second point, kind of into 3 different stages. You'll do some initial screening to see where an individual security name falls. If you still think there's interest, you take it to the second step, which is a deeper dive on the individual name. This is all research oriented, basic fundamentals, I would say, that are incorporated into your investment selection or your investment screening. And should you want to continue, you kind of do more work, more documentation, and ultimately it's in this final, decision phase. You're armed with all this information, then you can make a fundamental buy or sell decision, or maybe it's a hold decision. You can also use the similar process and fundamentals to reevaluate the names that you currently own. So that's a little bit about this tool and framework. Both of these were developed before we decided to formally engage and submit the application. As I indicated, our application phase was only Ancora alts. There was some confusion with the PRI folks because of the larger Ancora entities. We spent a lot of time trying to educate them and trying to differentiate ourselves, trying to indicate, what we do versus what the other sides of the firm do, why an insurance practice and a 401k practice is irrelevant and really doesn't hold water in what we're trying to do here, and why a PRI signatory would be important, for us versus them. So we finally got them over the hump. We were able to formally get accepted, and we kind of then jumped into the reporting cycle. Again, depending on where you are, it really took us from October of 24, took us a couple months to really work on the application. Based on schedules, priorities, you can streamline that, a little bit, but there's a lot that goes into it. So just want you to be aware. That was our experience. You can formulate your own based on your resources and your desires. So the first reporting cycle, as I indicated, was in May of 25. Again, by way of background, we got approved at the end of 24. So we really used the 24 year, not only to get formally adopted, but to integrate the toolkit, and the policies and best practices into our investment framework. We also continued that into 25. 25 really narrowed in on what we had to report on. It's a calendar year reporting, so you really, or at least our experiences, we really couldn't do much in 24. We had to wait for 24 to close so that we could report on it into 25. We really relied on Valoris expertise, not only in the application process, not only in creating the policies and the tool kit I described, but also in the reporting. Some of the expertise that Saba just described on some of the changes is what you can expect from them. They're experts. They know this inside and out. And, they're our consultant. They're our partner. They're almost like part of our team because of our limited resources in order for us to succeed, in everything that we're doing in these initiatives. So again, we set out a timeline, we set out a framework, we were able to successfully report. Took a couple months. Ultimately, we got the report back, and you learn from that. I'm kind of cycling into this 5th point. I would say our results were kind of as expected, with us being a activist certain parts of this are more fundamental to what we do. Other elements like, not to pick on one, but climate control, we're further down the curve on what we need to do. And, we knew that going in, and those are initiatives we can work on going forward. So you get your report, you see what you did, what you thought you would do, where you thought you would come out, what they think. And then as you kind of move forward, you look to see what you can do to change, better your organization, better your policies. And, again, relying on Valoris, they put together probably a 5 or 6 page document of some of the findings, some of the action points and things we can do going forward to improve ourselves. I think you got to look at this, or at least we look at this as a circle. Yes, part of this is getting up and running, but once you're up and running, every year you're kind of going through a process of, not only reporting, but trying to better implement new practices and, continue to evolve the priorities and the practices that you're doing in-house. So real briefly, that's been our experience. Can't thank Valoris and the team enough. And when I say team, it is team, because we got 4 to 5 people on most calls.
Thank you very much, Brad, and thanks for the kind words. It's been a great pleasure for the Valoris team to work with your team. And I think your presentation also shows how the PRI, becoming a PRI signatory, was not the first step at all in Ancora's journey to formalize and improve its responsible investment policies and practices. Like your firm, my old firm was focused on a particular element of responsible investment, in our case, mostly corporate governance, as it is actually in alts as well. And so as a result, the process of going through PRI reporting highlighted for us what was missing or what we had not articulated so well. And I think we picked up on that in our work with you guys as well. So thank you very much for that. I think we got a question specifically for you, Brad, in the chat. Is it okay if we ask that now?
Sure.
Okay, this is from Daniel. I'm going to read it to you. To what extent did you find that much of the data and information you mentioned in step 2, the ESG toolkit, was already being collected and analyzed by your investment teams before you decided on PRI reporting? Thank you very much, Daniel, for that question.
Thank you very much for the question as well. I can tell you that when we built the policies in step 1, we kind of built it in a way that it's open-ended, that we weren't locked into a box. So I'll pick on, an oil company, Exxon, 10 years ago, somebody may come back with an ESG type of mandate that says their oil are bad, we can never invest in it. That's not what this is about. That's not how we, looked at this and designed the tool. I'd say a lot of the tool, as I indicated earlier, we were doing. It may have been in our head and it wasn't on paper. So a lot of this exercise, helps us to document what we're doing more formulaically. But certainly, we added on to what we were doing in some of the more advanced stages. And it could be as much or as little as you want it to be, is the short answer. We chose to kind of expand upon what we're doing to try to do better and enhance not only our research, but our best practices. And that's what we thought we needed to do to be successful in the PRI environment. So I hope that helps. If anyone else has a question, or Mike, if you want to expand upon that in any way, feel free to.
No, I think that's responsive. I hope that's responsive, Daniel, to your question. We'll have time at the end as well for live questions, not just through the chat. So with that excellent presentation from Brad, from a relatively new PRI signatory, we'll now move to an institution that has been the leader of sustainability and stewardship at an institution that's been doing it for a much longer period. Karin Reichenberg is Director of Stewardship at Sands Capital, an active long-term investor and leading innovative growth businesses globally. SANS is based in Arlington, Virginia, outside of Washington, D.C., with also offices in London and Singapore, and it manages more than $56 billion of assets for its clients as of the end of the last calendar year. Karin, just like for Brad, if there's more you want to say about SANS or yourself, please do, and over to you.
Great, thank you for that introduction, Mike. Yeah, so I am Director for Stewardship at SANS. We are, as Mike said, we're a long-only firm specializing in public growth equities, and we run very concentrated portfolios. So just for context, in any one of our strategies, we might own 20 to 30 companies at any given time. So very concentrated, which matters because it's a particular type of investing, right? It's different from what Brad does and what other investors do. And so many years ago, we started developing a more formalized stewardship program. I joined the firm in 2020, just for context, but we've actually been signatories to the PRI since 2017, which means that I wasn't there for the early years of the first reporting cycle. But what I do know is that the firm used the PRI reporting and the PRI framework as a way to develop its policies and its guidelines and its frameworks. And it really anchored a lot of the policies that we have today go back to what the PRI recommended at the time, and they decided to anchor it all in that. And so in that sense, it was, like Brad said, a great tool for getting started because it's a universally recognized framework organization that has spent a lot of time thinking about what are best practices, et cetera, has a lot of good tools and information and guidelines out there. And so it was helpful in setting up the basic infrastructure for us. And from then on, we've reported on the PRI assessment every year since, and have evolved our stewardship practices quite significantly over the time. And there are multiple things that I think the PRI has done for us. So, beyond the first initial base of getting us started and using it as a sort of a blueprint for designing our policies, it's been a very good signaling mechanism, right? That's one of the reasons why most people sign up for the PRI, right? It's sort of having getting a university degree at the end of the day doesn't really matter that much what you get the degree in, but as long as you have it, it's kind of like a stamp of approval that's saying you've put in time and energy into something, and you at least have some basic skills, and you understand certain rules of the game, right? So the signaling mechanism was definitely more powerful, I think, in the early years. I think now it's more common for people to have the PRI signatory status. But I think because of that, it's if you don't have it, people almost question why, because it's now so widespread. And then it's been interesting to see the assessment and the reporting itself evolve over time. I think the PRI has been responsive to people and feedback and inputs, and we've noticed how some of the questions have changed, and in many ways, actually in a helpful way. I think in the earlier years, we frequently had frustrations with some of the questions because we felt like they lacked clarity, or they didn't quite apply to our situation. So we always had to be I don't know, fill in the other box. And so that has definitely improved over time. That being said, it is a sort of a standardized toolkit that represents one viewpoint of what the best practices in responsible investing and stewardship are. And I think that's really important to remember because it is probably one of the most widely accepted frameworks, but there will always be things that your firm might deviate from and might choose to do things differently that might not be the greatest, that might not give you the greatest score in a certain category in the PRI assessment. And that is okay. I think that is where some of the biggest value that I think we've seen comes in, is that it is a tool for obviously self-improvement, but also self-reflection and questioning of your own practices, and but also questioning like what is considered best practice out there, and like what does the world consider best practice, and what do we consider best practice, and what makes sense, what is best practice in our context, and what makes sense for us. So I'll give you an example. Probably every year we've done this informal exercise, at least since I joined the firm, of how can we improve our score further? Like where are we lacking? We go through the questionnaires, like could we have, how could we answer better on this next time? Are there policies or practices or things that we should be doing? And this is very interesting because sometimes you get to things, for example, the one that comes to mind is in the proxy voting section of the questionnaire. There was a question about, do you pre-declare your votes publicly? And we discussed this. We said, should we be doing this? Is this like, because we'd also gotten that question from other people externally, and we'd seen the discussion about this. Is this the new best practice? Should we be doing this? We had internal discussion, ultimately decided for a variety of reasons, both practical and philosophical, that we were not going to do this. This was just not for us. And it just didn't make sense for us as a firm. Might make sense for other firms, but at least we came up with a good rationale for why we weren't going to do that. And so next time somebody came around, a client or someone else, and asked us, wait, why are you not doing this? We had a good answer. And so this is the additional benefit of PRI. It's sort of, it fortifies, it forces you to think of like, why are we doing certain things the way we're doing them, and come up and be intentional about setting yourself up and having, good reasoning for everything that you do. And then an additional benefit is it also enables you to build a library of kind of, I guess, like language and responses for other types of reporting. We do a lot of client reporting. We look at a lot of questionnaires. And so having that, that set of questions and those responses that we formulated for PRI is helpful, and then in doing other reporting. So I'd say those are the main kind of all the different ways that we have gotten benefits from PRI, and it's going to be really interesting to see how it evolves this year. Again, I feel like it's a good reflection on kind of how also just the stewardship and ESG field has moved and evolved over time, and it's so every time there's a kind of another turn at the crank of evolving the framework, it's a little bit of a reflection of what's happening in the broader world. And I think there's definitely right now has been a focus on just simplifying and streamlining and like getting back to what actually matters after, I don't know, a decade of just the ESG and stewardship field exploding and going in all sorts of directions. Now everybody's like back to, okay, but why are we actually doing this, and what are the things that really make a difference? And it seems like that's where PRI is moving as well. So I'm really happy to see that. I'll leave it there and see if there are any questions.
Thanks very much, Karen, for walking us through your experience and also what you've derived from it. I couldn't agree with you more about sort of standing your ground where you may not be giving PRI the answer that would get you the most points in the scoring system. PRI set out for itself a very difficult task, which is designing a questionnaire system that would apply to every type of investor that would possibly want to become a PRI member. It can't work perfectly. We had a very similar experience to yours at Cardic. I mean, you were at Cardic at the time. We were a governance and sustainability fund. We thought that we should get the highest possible score the first year that they scored investors on their questionnaire responses, on their reports. And we didn't get the highest score. We got one notch below, and there were two comments. One is you didn't have a responsible investment policy on your website, number one. And number two, you didn't report, and you don't report your voting records. We were, as an active ownership investor, voting and direct negotiations with companies was core to our investment thesis. For the first one we could solve, and we thought our website was a responsible investment policy. We thought it was pretty clear that it was all about that. But what we did is we just cut and pasted certain portions of it, created a document called our responsible investment policy, put it on the website. Next year, we got full credit for that. But the second one, we didn't try to pander to them. We didn't try to change the policy at all. We viewed it as a strategic, it would have been a tactical error for us to publish our voting practice, our voting record, because that was part of negotiations, and we'd end up if we made a compromise with one company, all the other companies would want the same compromise. We wouldn't want to do that, and we had a good reason not to, and we put it in the report. And eventually, I think PRI appreciated that you shouldn't get points off for that if you have a special reason that you don't do it. So they're learning all along. And one thing, I guess, also to draw about the experience that Ancora Alts had with getting Ancora Alts to become a PRI member without the whole group joining it. It's important to remember that the folks at PRI are not experts in fund management. I mean, any financial institution of any type, in fact, non-financial institution service providers can become PRI members. And the folks you interact with are extremely helpful at PRI, about responsible investment generally, but they're not going to know your industry. And so you can't expect them to do that. And the last part I wanted to pick up on your remarks, Karin, was you discussed signaling and how for most members of PRI, being a member is at least partially signaling to the market their receptivity and internalizing of responsible investment as part of their investment philosophy, and that's true. I recently attended the Rights and Responsibilities of Institutional Investors conference in the Netherlands, and one of the panels discussed PRI reporting and said, "Well, is it still necessary as a signaling mechanism?" And I think the consensus was it is for probably most investors still, but the PRI reporting started long before there were stewardship codes in place that required, in some countries, investors to either voluntarily or mandatorily report, before the stewardship reporting was as sophisticated as today. So I think the consensus was for some investors, like really large ones who already have a history and have really sort of surpassed the requirements of the PRI, maybe they don't need to do it anymore. But for investors that are, don't have giant teams like, BlackRock or something like that, or are not in countries where there are stewardship codes, it's still an important signal. So thank you very much, Karin. With that, we're going to kind of look at the other side of the relationship between outside support and institutional investors and fund managers that Brad described. We're going to hear from Monica Pedraza, one of our senior analysts at Valoris, talk about how we work with our clients and what we've found most useful, most insightful from our experiences. So Monica is based in France, like Saba, but they're in different parts of France, actually opposite ends of the country. Monica, over to you.
Yes, thank you, Mike. Hey, everyone. My name is Monica Pedraza. I am a senior analyst at Valoris, and I will talk about our experience working with fund managers on PRI reporting. We don't have a lot of time left, so I'll try to be brief allow for some questions at the end. I would like to start with the reasoning behind PRI's reluctance when Ancora Alts filled in the independent signatory application, despite being part of a larger group. Indeed, PRI is very strict when it comes to groups. The rule is simple. If one entity within a group wants to become a signatory, the whole group has to apply together, either as one single signatory or with all subsidiaries applying at the same time. And to be honest, the logic is understandable because partial commitments can sometimes create confusion. That said, PRI does include one exception, a subsidiary that is sufficiently autonomous, so independently branded and operationally distinct, can be admitted as a standalone signatory. But you need to know that this is far from automatic, and the burden of proof sits firmly with the applicant. I mean, that's what Brad explained. At the time we built the case, we engaged with PRI, we provided documentation, we had a lot of back and forth with different people there. And at the end, PRI accepted, and Coralt is sufficiently autonomous to be part of the PRI journey on their own. Now, more broadly, what does the journey actually look like for a fund manager approaching PRI for the first time? I'll start by giving you some context on what the process looked like before the changes that Saba explained. So PRI's reporting framework was at the time organized around modules that Saba has already mentioned, and I won't mention again here. And at the time, not all modules applied to every signatory, only the relevant ones. The relevant ones were chosen according to the activities and the asset classes that each fund managed. So under a previous structure, a signatory would complete an entire module for each applicable assets separately. And as Saba explained, in 2026, the framework is consolidated, and the signatory will now complete a single indicator, say investment analysis, and provide responses for each asset class within it. So I think this change can represent a significant time saving, and we'll see if this proves to be effective. Another important point that often surprises people is that PRI disclosure is not a box-checking exercise. A significant part of the reporting requires actual descriptions, justifications, and explanations of how things are done and why. So you have to be able to articulate your approach, not just confirm that you have one. And this is where the process tends to be more useful, not just as a reporting obligation, but as an opportunity. I mean, as David and Karen have mentioned, for many fund managers, going through the disclosure of for the first time really reveals what they have, the practices that exist, what's being applied, but maybe some things that have never been formally named or documented. So it really creates a natural opportunity to formalize what can be formalized, strengthen what can be strengthened, and maybe identify what is missing. I'll just like to mention one final element worth highlighting. So the senior leadership statement, where PRI invites signatories to publicly reflect on their progress and their responsible investment objectives. For many organizations, getting the leadership to put that in writing is not just a reporting requirement, it is really an engagement exercise in itself. I'm sorry if I was too quick, I'm just minding the time here. So this is what experience has shown us. And Mike, the floor is yours now.
No, thank you very much. I think underlined when you were discussing about the group and subsidiary rules of PRI, it's another example. Brad also raised it that PRI people are not expert in how funds are managed and how independent subsidiaries can be from the parent. It's an education process for them as well. I think we should probably move on at this point to questions and answers. If folks have them, please put them in the chat. I suppose I can open. That seems to be working pretty well. So just put them in the chat. If you'd like to raise your hand, I can also recognize you that way. In the meantime, though, before we have any additional questions, I have a few for Brad and Karin. You can take it in any order you want. The first one is when I was in charge of stewardship and PRI reporting at a fund manager, I had the advantage of being in a firm where responsible investment and sustainability were like central to the brand. They were central to the strategy. So I kind of had it easy to get buy-in from the senior management. I was a member of the senior management, as well as from the investment team, the folks who made the investment, did the investment research and ultimately advocated for the investment decisions. But your firms are different. They're not focused just on responsible investment. They're a little bit, as Brad described, it's a much broader set of criteria of investment. So how have you managed to succeed, Karin and Brad, in ensuring that everyone at your firm that needs to contributes to the PRI reporting, and you get their attention, you get them engaged, and also the feedback loop? How do you get to them the implications for their work of what we learn in the course of the PRI reporting and related work? So I don't know if you want to start, Brad or Karin, whoever smiles first. And I think it was Brad. So I think you go first, Brad.
Lucky me. So being a small organization has its advantages and disadvantages. One of the advantages that we do have is ease of communication with such a small group and us sitting basically almost right next to each other, it's really easy to walk next door or to shoot an email to a couple people, to get across your point. I think if you take a step back, though, Mike, much like your forum, a lot of this was ingrained in what we did. Case in point, you mentioned our Warner Brothers recent encounter. Warner Brothers was going out selling themselves to either Netflix or Paramount. There was a deal with Netflix, and we basically stepped up very publicly and said, hey, wait a minute, your board's not doing its fiduciary duty. You haven't formally shopped this company in the way that you should be. Go out and solicit bids from everyone. We think you can get a higher price. We actually took it a step further that said, basically, if we have to get engaged, we have a history of taking out CEOs, and we think the CEO is taking this to keep his job. So again, that's just a governance practice that's ingrained in what we do. A lot of what we do on the activism side is much like we did with this PRI practice, evaluate the companies, what do they do good, where are the shortfalls, where can we help improve? And, again, there's a lot that we still need to do, but fundamentally, it's ingrained in everyone here. And should we want to enhance, it's a communication effort and exercise.
Thanks, Brad. So I've been to both your offices, Brad's and Karin's, and Karin's is bigger. And I don't think they all sit next to each other all the time. It's a bit of more of a process for them to communicate with each other. So Karin, how do you manage it at SANS?
Yeah, it's definitely a bit different. So I'd say there's a difference between communicating the importance of just responsible investing practices and stewardship in general versus the benefits of PRI reporting specifically, or being a PRI member. I'd say, separate them out a little bit. I'd say that for the first one, we think from the start, just by the nature of how we invest and being very concentrated shareholders, very long-term shareholders, often one of the top 20 minority shareholders in a business. The nature of our relationships with businesses, have frequent touch points with companies. We engage with them a lot. And so the case for why, for why ESG, why stewardship was kind of straightforward from there, because it just makes sense for an investor like us with the kind of concentration time horizon that we have and the kind of relationships that we have with companies. Is really a fantastic opportunity for us. And so that has always I think that was always the idea from the start. I think where maybe, obviously with time, you then, as you evolve things, you have to maintain just an ongoing, channels of communications and education with different internal stakeholders about why we're doing certain things and why they're important and why they're value added. And it is like an ongoing thing. I think it never quite stops when you think that it's like, okay, you've done enough. You always need to do a little bit more, because also the field evolves. And we started with no dedicated stewardship professionals to having a 4-person stewardship team. And so who does what has shifted with time. Also, we started off much more like, Mike, like we were at Cardica before, more governance focused, and over time built a lot more expertise in the environmental and social areas, which our research analysts were just not as familiar with. So there was a lot of just education to get them up to speed with why, with those areas and what to do and like how to handle those conversations and engagements. So that's like one element. I feel like I always say, I feel like the stewardship professionals are really one of our most important skills is communication. And so we spend a lot of our time with that. The second one, PRI reporting, is a little bit more straightforward in that there is a very clear business case. If you want to attract investors, asset owners, there's so many different, or, you want investment consultants to have you on the radar for certain kind of mandates. Being a PRI signatory is just helpful. It does check a box that sometimes just gets you through a screen, at least an initial screen for like, okay, there's like a base level of responsible investing practices at this firm. And so that just helps you in searches and helps you become be noticed. And the effort required on an annual basis, I think, is not, I think it's getting better. It was a lot more effort in the past, but relative to what you get from it is modest. And so I think it was not that hard to explain that to, I guess, senior leadership or the firm that, like, look, this is just it. And also, when you look at the PRI principles, they're very common sense. It's not like they are hyper, like you have to be an impact fund to be able to be a PRI signatory. No, there's a lot of just very basic common sense principles by which I'd argue most investors should live by. So that was not as hard. I think maybe going forward, back to your point, Mike, about there's now other frameworks. Now the field has evolved. There's stewardship codes. We're, for example, also a signatory to the UK stewardship code. There's maybe a question of, do we still get the same value out of PRI that we did, the signaling value? Like if we're already a UK stewardship code signatory, which is like a lot more reporting and more sort of, we have to produce a whole like qualitative report. Does that still
and you
make
have to
sense?
use UK spellings too. I mean, that makes it even harder.
So, and then there's other frameworks. So I think as the field evolved, we will keep asking that question. I think for now we still believe it has value, but who knows, right? And does something eventually just become so table stakes that it sort of loses its value? I don't know. I don't think it has yet, but certainly we will keep evaluating that. And yeah.
Thank you very much, Karen. So I think this will probably be the last question because I don't see any more from the audience. But we'll take it. You can do it. You can respond first, Karen, and then Brad can be our last substantive speaker for this webinar. And the question you mentioned, communications, internal communications, Karen. But what about external communications? In particular, my question is, what impact does your PRI reporting have on other communications with your investors? What does what you do around PRI or how you articulate around the PRI reporting, how does it overlap with or contribute to your dialogue with maybe the investors generally or individual investors in their discussions with you, or maybe even in your efforts to bring in new clients? So we'll start with you, Karen, and we can end with Brad if that's okay with you.
Well, I'd say the PRI reporting every year is an opportunity for us to refresh how we talk about ourselves and what we do, and we have a kind of library of responses that we use to answer questions about our stewardship and ESG practices. And our PRI reporting definitely informs that. And they kind of play off of each other, right? We have this library which we use to fill out the PRI report, but we'll probably every year update some of those responses, which in turn updates some how we talk about our ESG work in other areas, including our annual stewardship report, including maybe quarterly like decks that we use for meetings and for clients, including what we write on our website. So it all kind of plays off of each other, and it's just a good annual touch point to refresh that language, I'd say. And it's obviously always a nice thing when you get the score, when you get back the assessment, to communicate that out to our clients. We always also are looking for feedback on how we can continue to improve. And so I think it is a good starting point for dialogue.
Thanks. And Brad, if you want to say a few words about how it's impacted your discussions with investors.
I think the biggest thing I'd add is there's certain firms that we have that come in here to do annual due diligence. And this is a topic that they specifically ask for, and sometimes we'll spend an hour in a 4-hour meeting talking about. So, do you need to get into the specifics of the score? With us being so new, we haven't, but we can talk about what we're doing, how we're doing it, the changes that we're doing. And to certain investors, it's much more important than others. in our hedge funds specifically, we have a lot of high net worth individuals that we manage their money. Less interested, probably don't even know that we're doing this. Several of the institutions, though, it's critical. Is it check a box? In some cases, yes. Would some people not invest because we're not doing it? Probably. Again, it depends on each investor's a little bit different, has their own thought processes around what's important to them. As Karen kind of alluded to, though, these are relatively straightforward, common sense things, and why not do it to do the right thing?
All right, thank you very much, Brad. And so let me thank our core panelists, Brad and Karin, but also Monica and Saba, for what I thought was a fascinating discussion around the topic of PRI reporting as a strategic tool. Appreciate your frankness. I appreciate your openness. Appreciate your thoughtfulness. I hope that this is a recorded session, so it will be available on our website. So your words will echo through the ages. I'd also like to thank on behalf of Valoris, our partners in this webinar, StePs, the Association of Stewardship Professionals. Valoris has been a supporter of StePs since the very beginning. We learn from our relationship with StePs, and we hope we contribute to its success. With that, I'm going to turn over for, I guess, the last word of this webinar. I'll turn over the microphone to Catherine Markowitz from StePs to say a few words and to close the webinar.
Thank you. The moderation. I just want to briefly go back to the beginning, actually. So as outlined by Alexander, reporting, assessment, transparency, that's all an integral part of the certified stewardship professional curriculum. And I think, yeah, PRI reporting sits within this broader ecosystem of sustainability and responsible investment reporting as a practice-oriented, investor-specific layer, maybe to say. So within this webinar, we try to emphasize its role as a strategic tool. I think the experts have provided some food for thought, highlighting the challenges, but also the benefits of it. Thank you for this. And yeah, I think it's a wrap. We have no more questions in the chat. Thank you again, Mike, for moderating. Thank all the panelists for sharing your insights. Thank you, the attendees, for joining the webinar. We hope you enjoyed the discussion. So to review the summary and the recording, go to our website, stewardshipprofessionals.com. Follow us on LinkedIn. We would be delighted to see you joining our community. And so with this, I would say goodbye and have a great rest of the day. Bye.
Thank you. Goodbye.